Good evening, everyone. Welcome to our FCNH webinar series. This webinar series is brought to you by Bursa Malaysia Derivatives and managed by our company Excellent. I'm not quite sure whether you're aware that Bursa Malaysia Derivatives is going to launch a new currency futures contract, which is the first currency futures contract in Malaysia on 11th of December. So that's the reason why we are having these two webinars, for you to understand better about this currency futures contract. So our topic for today is unlocking the potential of the new Mini USD CNH currency futures contract. And this session, we are going to divide into two sessions. The first 75 minutes will be presented by both our speaker, Mr. Ryan Long and also Mr. Siwan So, followed by 15 minutes of Q&A session. My name is Ting Ting. I'm the moderator of this session. Now, as usual, before we start, can you please check whether you can see my slides? You can hear my voice or not? If you can see my slides, you can hear my voice, can you please type in 222 in the chat box? Or else you can click on the emoticon as well. I repeat, if you can see my slides, you can hear my voice, can you please type in 222 in the chat box? Okay, very good. I see many of you responded. For those who cannot hear me, you can't see my slides. Now you can just only follow this instruction. Now, as usual, please turn off your video so that you can have a better bandwidth. Especially right now, I'm not quite sure in your areas or not. In Klang Valley, we're having a heavy rain. So if you turn on your video, it's going to take up a lot of your bandwidth. It might affect your learning process. Along the way, while our speaker is presenting, if you have any question, you do not need to wait until the end of the session. You can start to submit your question. We are going to get our speakers to answer your question, to clarify your queries before the end of the session. So how can you submit your question? You just need to click on the Q&A box, type in your question, and send it to all co-hosts so that we can pick up your question. Now, please do not type your question in the chat box, because we are not able to pick up your question from the chat box. You are going to see that the chat box is going to flow very fast. So repeat, if you have any question, please send your question in the Q&A box. So you just need to click on the Q&A box, type in your question, and send it to all co-hosts. Now, not only today's session, next week, we are going to have another session. So today's session, we are going to start with an introduction. Then we are going to have some application. Next week, we are going to have another session purely on application. So next Thursday, same time, 8:30 until 10 p.m., we are going to have another topic called multi-style CNH trading, from entry strategies to expert managed exits. So if you are interested, please scan this QR code to register, or else in the chat box, there's a link. Please click on the link to register. So I'm going to give you a very quick 2 seconds. You can take a photo, or else you can screenshot, or you can scan this QR code. You can register accordingly. Now, I'm not quite sure whether you're aware or not. Bursa Malaysia Derivatives is very kind. They are going to give away some lucky draw. We're going to select 10 winners for today's session itself. So today, the total price worth more than 300. So you are going to win this Touch and Go e-wallet reload pin. How can you win it, or how can you become one of the lucky draw winners? Later, I'm going to let you know. So please stay tuned with us. And the only tips that I can give it to you is, please listen carefully to what our presenter is going to present for today's session. So I hope that this tips is going to help you later to become one of the lucky draw winner. Now, before we start with today's session, we are very honored to have Mr. Ryan Long with us for this session. And Mr. Ryan Long is currently the head of products and market development at Bursa Malaysia Derivatives. He is responsible for improving and expanding derivative product offering of the exchange. He has more than 20 years of experience in the derivative market, which includes institutional dealing, risk management, as well as also proprietary trading. So without further ado, please allow me to pass it over to Ryan. So Ryan, the stage is yours.
Thanks, Ting Ting, for the kind introduction. I hope you can hear me.
Yes.
I will be covering a short introduction of the currency product that Bursa Malaysia Derivatives will be launching soon, next month. As Ting Ting rightly pointed out earlier, it is the first currency futures contract that is being launched by a Malaysian exchange, Bursa Malaysia Derivatives. Yeah. As you can see, I am standing in for my colleague To, right? Who is being showcased on the poster that you received earlier. To is the younger and more handsome one, so I'm just doing his job for him today. Allow me to share my screen. Start with an overview of the products that are being offered by Bursa Malaysia Derivatives. As you can see, we currently have three key groups of products. We have commodity products, we have equity products, as well as financial products. Yeah, we have 9 commodity products. Many of you may already know our FCPO crude palm oil futures contract is our star product. It's the most actively traded futures contract offered by Bursa Malaysia Derivatives. It is also the most actively traded crude palm oil futures contract in the world. Yeah, on a daily basis, it is trading about 67,000 contract on a daily basis. The second most actively traded contract is the FKLI, which is the Bursa Malaysia KLCI futures. It is basically the stock index futures, yeah, that is being offered by BMD. On a daily basis, around 10 to 12,000 contracts are being transacted. Yeah. Last year, we relaunched our gold futures contract. We call it a FGLD. Why it was a relaunch? Because we used to have a gold contract previously. It was quoted in Ringgit Malaysia per gram. We sort of redesigned the contract and relaunched the contract last year. So now this futures contract, this gold futures contract is quoted in US dollar per troy ounce. And it is quoted in, it is based on a London gold price. Yeah. So the settlement is based on LBMA. That is the currently an upcoming contract. We actually have a campaign going on currently. I will be giving you more information about that later. Yeah. So back to this currency futures contract that BMD is going to launch next month. It is a key milestone for BMD. It is the first currency futures contract that is being launched by BMD. I will be going through the contract specification after this so that when you trade this contract, you know exactly what you are trading. Right. So this contract is called FCNH. That's the short name for this contract. It is a cash-settled contract, so no physical delivery of the underlying currency, which is CNH. Just allow me to mention this. Yeah, CNH is known as the offshore renminbi currency. As you know, or you must have heard, there is also CNY. CNY is the onshore China renminbi currency. Yeah. So what we are offering here is US dollar versus offshore renminbi contract. The contract size is 20,000 US dollar. It is being quoted in renminbi per US dollar. The minimum price fluctuation, as you can see, it is in 4 decimal places. Some of you may have traded currency contract before. Yeah? So per tick, or rather per pip, the value is 2 renminbi. The trading hours from 9 a.m. until 6 p.m. As you can see, there's no lunch break in between. Yeah. Of course, we have the night trading, T+1, we call it, that starts from 9 p.m. until 2:30 a.m. the next day. T+1 trading is only available from Monday until Thursday. There is no night trading for all BMD products on Friday. Yeah. So the contract months being offered a spot month, the next 3 calendar months, and the next calendar quarter months. So in total, there will be 10 contracts that are being listed at any one time that you can trade. Yeah, the quarterly months are March, June, September, December. Final trading day is the third Wednesday of the contract month, meaning if you are trading the November contract, so the third Wednesday of November will be the last trading day. Yeah, the trading hour on the last trading day would be 11 a.m. So it will not go to 6 p.m. on the last trading day. The final settlement price is based on the Hong Kong Exchange final settlement price that is being traded or settled on that day. Just for information, this is actually a licensed contract from Hong Kong Futures Exchange. That's the reason why we are using Hong Kong's final settlement price. There's a good reason for this because, as you know, Hong Kong is a offshore financial center for China, right? It is considered as a proxy to China. So by using this contract offered by Hong Kong Exchange, we believe it is something that is reflective of what is being traded in the OTC market, or rather in the physical market. Moving on. So how does this US dollar CNH? I think there's a typo there. Yeah, it's actually CNH. It's not CNY. So this conversion rate or this currency rate is actually determined by the Treasury Market Association, which is based in Hong Kong. Yeah, the rate fixing on a daily basis is usually around 11 a.m. It is a spot market, so they will only publish the spot rate. So what they do is they will compile all the US dollar CNH trades that are being transacted on that particular day between 10:45 a.m. until 11:15 a.m. So minimum transacted amount would be minimum it's US dollar 1 million lah. Yeah. So it has to be executed through an approved money broker. So what they do is they will compile all the trades and come out with the reference price. Just to give an example of how the P&L is being calculated. Yeah, so this is a bullish scenario. Assuming if you are buying the contract at 7.3 and you are selling that contract at 7.31, again, it is being quoted in 4 decimal places. If you look at the price change, yeah, it's actually 100 pips change in the price. Yeah, you have basically captured a 100 points or 100 ticks or 100 pips from this trade. So you have to multiply by 2, which is the tick value, 2 renminbi. Yeah? So your P&L would be renminbi 200. So this is a profitable example, of course. Yeah. If you are doing the opposite, if you sold at a lower level and bought back at a higher level, that would be exactly the loss that would be being that's incurred. The next example is a bearish scenario, right? You sell at a higher price and you buy back at a lower price. So if you look at the example, the prices in the example, 7.35, you sell at that price, you buy back at 7.31. Again, there's a 400 pips difference there. What you do is you just multiply the 400 by 2 renminbi. That would be your P&L. Yeah, that's the profitable scenario, right? If you do the opposite, if you have a loss, it will be the same. You will have a loss of 800 renminbi. So the P&L calculation is actually very straightforward. What we do is you look at the tick difference in what you call the tick, right? Then you just multiply it by 2 renminbi. Okay, I have basically covered the portion for the currency contract that we'll be launching. And I actually wanted to mention about the launch date, but I think Ting Ting have actually covered that. The contract will be launched on the 11th of December. That would be the first trading day for this currency contract. So I wouldn't have to go through that again. I've mentioned about this gold futures contract retail trading challenge earlier. So we have this campaign going on. In fact, it have actually started on the 16th of October. It will run all the way through 31st of December, right? So this is a trading challenge, meaning people who trade this contract the most will win prizes. So it is open to all retail participants, excluding the professional traders like local participants and all that, right? In order to qualify for this campaign, the retail participant will have to trade a minimum of 120 lots. So grand price, 20 grams of gold metered bar. If you look at the gold value today, right, per gram is about 300 ringgit. So the 20 gram of gold bar is worth around 6,000 ringgit as of today. We have you can see there are other prizes as well, 10 gram, 5 gram, and 7 consolation prizes of 1 gram each. Again, just to share with you, we have a lot of information or study material regarding futures trading, right, available on our website. What you can do is you can go to bursaacademy.com, right? That's the website being shown on the screen now. You can go and find a topic that you are interested in. There are many of them for different products, for different trading strategies and everything. Go and have a look. I believe you will be able to find something that would be of interest to you. Other than that, we have this thing called derivative trading simulator. So it is something like a dummy account that you could set up. What you can do is you go to this website, Bursa Marketplace again, .com/market/DTS. You put in your email address and you could sign up for a username. It is valid for a month, if I remember correctly. So this trading platform is based on QST. Many of the local brokers are already offering QST as a trading platform. So it is based on real codes. It's based on real codes. You can have price ladder, you have charting tools and everything. If you would like to polish your trading skills, check this out. So following the DTS, we do have this virtual trading challenge that is being held on an annual basis, on a yearly basis. We call it the VTC, right? This year's event was actually held sometime in August, right? That's the challenge period. We have prizes worth up to 40,000 ringgit to be that has already been given away. So if you are interested in participating in this trading challenge, check with your brokers or check the Bursa Malaysia website. You'll be able to find more information. Right, so that's all I would have to share for tonight's session.
Presentation. Now we are going to go into a Q&A session for Ryan's session. So if you have any question, you can start to submit in the Q&A box right now, and we are going to ask or refer those questions to Ryan. Now, let me pick up, because of time limitation, please allow me to pick up 2 to 3 questions that's relevant to this topic or most important. Then I saw some of the question is more related to later stage. Like for example, you asked what's the difference between CNY, what's the difference between CNH. Later, we are going to have another speakers to cover that. But related to Ryan's question, let me pick up the first question, Ryan. They are asking whether this is a Sharia compliance products.
As this is a cash settled contract, futures contract, there's no, we do not have a Sharia status for this contract.
Another question is how much roughly for the margin?
The margin would be around between 2 and 3% of the contract value. So it is a 20,000 contract. So if you multiply that with 2% and 3%. So we are talking about 400 to 600 US dollar per contract. That would be the initial margin.
Okay, the last question is related to these currency futures. For these currency futures, right, anything that is so attractive for retailers to trade these particular products itself?
Yes, definitely. I mean, if people who are very sensitive to global economic events, right? So as we know, US is the biggest economy in the world. China is the second biggest. If you like to take a view on the economic development in these two countries, whereby the valuation of their currency will move and shift according to those economic events, right? You can use this contract to take a view. So if you have if you are bullish on US dollar, buy the contract. If you are bearish on US dollar versus offshore renminbi, you can sell that contract.
Okay, thanks a lot, Ryan. And thanks for your sharing. And we are going to move to our next session, our next speakers.
Ting Ting, maybe
Yes.
if you identify further questions later at the later stage, what you can do is you can compile those questions and you can send it over to me. We will respond accordingly.
Okay, thank you very much, Ryan.
Thanks, Ting Ting.
Okay, we are going to move to our next session. We have our next speakers, Mr. CY Saw. I believe many of you already know who he is. And CY is currently the lead trainers and also hedging consultants of Excellent. He's also a CMT chartered market holders, and his specialty is in training and development, technical analysis, training system development, and also coaching. So I'm going to pass it over to you, CY.
Good evening, everyone. Having a new futures product to be introduced in the Malaysia futures market, in fact, it's exciting, and it can actually, bring added diversity and opportunities for us traders and investors. Because it has a lot of diversity, opportunity, and even it can also serve as a risk management tools for all market participants, whether you are a trader, an investor, or even a commercial hedger. Now, today in this topic, we are going to explore further regarding this new futures product, the new Mini USD CNH currency futures contract. In short, we call it FCNH. And we are going to see what are the opportunities available that you can take advantage in your trading. And as Ryan has already mentioned earlier, in Malaysia futures market, we have several types of futures contracts. We have the index futures, commodity futures, interest rate futures, and now we have the new currency futures, which is this new Mini USD CNH futures, which we call FCNH. So let's dive into it and have a look on this FCNH. Before we begin, a quick look at this standard disclaimer. Of course, this presentation is for educational purposes only, and it is intended to give you a general understanding of the trading ideas as well as the product for currency futures. Of course, it is not a substitute for a plug and play strategy. You will still need to put in some effort on your side to develop trading strategies that suit your individual needs. As Ting Ting has already introduced earlier, my name is Chun Yan, but you can call me CY. So let's get into directly into this topic. I will be dividing today's session into 3 topics that will help you understand better what are the opportunities available in the FCNH currency futures. The first topic, I'm going to give you an overview about the Mini USD CNH currency futures contract. Now, besides understanding the contract specification, you still need to understand these futures a little bit deeper, because this is entirely a new futures product and asset class, and it's different from those index futures and commodity futures. So it is important for you to know the product basics and structure so that you can do the correct analysis. The next topic, what makes currency futures a good market to trade? which I believe it's a commonly frequently asked question. As I've already mentioned just now, that currency futures is different from other futures product because it has some unique characteristics that makes it interesting to trade. And we are going to see what are the potential of this futures contract that you can unlock. And lastly, which is the fundamental analysis for FCNH. Because currency futures is a different form of asset class and futures product, the fundamental factors behind that drives the market price movement for currency would be different as well. How you analyze currency futures is different from how you would analyze, for example, FKLI or even FCPO. So you need to pay attention to this carefully. So let's get started. Now, before we begin, let's have a quick poll and let me know how many of you here have experience in currency trading. So please type in yes if you have some sort of experience in currency trading, and you can type in no in the chat box so that it allows me to better adjust on my side so that I know how the depth that I need to cover for today's session. All right, I see some of you has experience in currency trading, very good, while majority of you has no experience in currency trading. All right, now later on I will be sharing with you about these currency futures from the very basic. Of course, currency futures, it's another product. It's like driving in Malaysia. Our driver seat is on the right hand side, correct? Driver seat on the right hand side. When we drive, we always stick to the left lane. However, when you go to the United States, it's an opposite. The driver seat is on the left hand side. We need to stick on the right lane. So yes, you may have already got some experience in trading stocks, maybe other futures contract. But same goes for trading. When it comes to currency futures, you will still need to learn the rules of a game, just like driving itself. You know how to drive already, but when you go to the new country, you will still need to learn the new rules. So let's get into the first topic. A quick overview on the FCNH contract. And here I'm not going to talk about contract specifications. However, you will need to understand the structure of currency futures, how to read it, and what is currency futures all about. Now, I believe you may have seen this in your lifetime before. Some of you, maybe to you is the first time, and probably you are quite familiar with it already because from time to time when you go to a shopping center or even to the airport, you may have seen this board or this code before, especially if you have been traveling to overseas for vacation. You need to exchange your Malaysia ringgit to another currency. So this picture is a typical money exchange quotation board, and all of the prices here are quoted based on the respective country currency and how much Malaysia ringgit you need to get or pay in order to exchange that particular currency. So already you have some basics regarding currency trading. For example, here you can see on the top left hand side for the US dollar, you can see that if you want to buy exchange for US dollar, you would need to pay for 466 and a half to buy $1 right? So more or less every one of you have some sort of basics in terms of how currency actually works. However, when it comes to FCNH, the similar rule applies. However, some of the structure might be a little bit different, so pay attention to this. Now, of course, one of the frequently asked question is that are there any differences between CNY and CNH or not? So of course, this CNY here does not stand for Chinese New Year, all right? It stands for Chinese yuan. In other words, sometimes we call it as renminbi. So when we mention about renminbi, it's actually the direct translation from Mandarin. However, when we call it CNY, it is what we call it's an English translation. So CNY, in short, it's what we call as the Chinese yuan, or in other words, we mention it as renminbi. However, they can use in different contexts and represent slightly different aspect of currency. So firstly, let's have a look at CNY. Of course, CNY is the official code for Chinese yuan, which is the currency used in mainland China. And it is also referred to as the onshore yuan because it is used within the borders of China only. Whereas for CNH, this is what we call as the Chinese yuan offshore. So CNH, on the other hand, represents the offshore version of Chinese yuan. It is also primarily used in Hong Kong or any other international financial markets. So CNH is oftentimes is used outside of China, especially for international trades and finance because it is freely convertible, meaning it can be traded and it is also used more easily in international transactions compared to the CNY. To make it simple, the main difference between these two currency forms is actually their convertibility and where they are going to use. So for example, CNY, it is a little bit more stricter, it has a stricter capital control because it is less freely convertible. It is mainly used inside mainland China only. Whereas for CNH, it is more freely traded currency that is used for international trade, investments, and also for finance purposes. And any Chinese yuan currency that is held outside of mainland China, so in short, we call it as CNH. So for example, if you are a tourist in Malaysia, you already convert your Malaysia ringgit to Chinese yuan. So if you're going to spend the Chinese yuan in China, so that currency is called it as CNY. However, if you're just holding it in your pocket and you're not planning to spend in China, then that is called as CNH. So in summary, CNY is the onshore Chinese yuan used in mainland China, while CNH is the offshore version used primarily in the international financial transactions, especially in Hong Kong. Now let's have a look at the difference between the CNY as well as the CNH chart. So here you can see the blue line represents the CNH and the orange line represents CNY. Both of them have a very close relationship, and as you can see, this historical correlation, it is above 0.8. It is close to 1, so which means it has a very tight and strong close relationship. Now correlation, of course, in layman term is, in short, it is a mathematical measurement to measure the relationship between two items, for example. So higher number closer to 1, it means it has a very strong and close relationship, like father and son relationship. Whereas for lower number, which means approaching 0, it means it has a lower relationship, like for example, you and a stranger. So this correlation number can be positive or negative, and later on in topic number 2, we are going to see some correlation might be positive and negative. Positive correlation means it moves together in the same direction with you because the relationship is very close. Whereas negative relationship means it is going different direction against you. Now we can have a zoom in on this chart and have a closer look. Both CNY and CNH, they move very closely, and the gap between them are actually very small. And in fact, if there is a big gap between them, meaning there will be arbitrage opportunity whereby financial institutions will actually buy the cheap ones and sell the expensive version. So in short, arbitrage in layman terms is called it as, whereby, traders or the financial institutions will take advantage of the small price differences of the same product, whereby they can buy from a lower price in one area and then sell it to a higher price in another area. So what is currency futures exactly? So in short, currency futures in fact is another form of financial derivative contract, and you can buy or sell that particular currency at a predetermined price in a future date. So currency futures, it is different from cash currency or spot currency, because there is no exchange of cash today. Because currency futures is about exchanging that currency at the future date that is specified in the futures contract expiry date. Now, secondly, is that what can you do with currency futures? Of course, when it comes to new financial products, right? There are several things that we can do. For traders like you and I, we can actually do some speculation whereby we can profit from the changes in price differences, like how you trade on FKLI and FCPO. So traders and investors can use currency futures to speculate on the future direction of the exchange rate. If you are bullish, you can take a long position and expecting the currency pair to appreciate, or take a short position if you are bearish about the particular currency. And the next thing that you can do about currency futures, of course, you can use it as hedging. And of course, currency futures are commonly used for hedging purposes. Later on, we are going a little bit in depth into these two particular activity. Now, if you trade currency futures, the first thing you need to know is actually how to read a currency code. And it's important for you to understand how to read currency code so that you know what it means and how to do your fundamental analysis. Because trading currency futures is different from trading stocks, it's different from index futures and also commodity futures. Since many of you here are still new to currency futures, I'm going to spend some time in getting you through the foundations, so at least you know what currency that you are going to long and what currency that you are going to short. All right. When we come to reading currency, there is always a two code. All right. One is the base currency, which is the front part, and the second part, which is the quote currency, and then there will be a value in it. So for example, when we mention about buying a currency, so in this case is that we are actually buying the base currency. So in this case is that we are going to buy $1, and in other words, you need to sell 7.2808 CNH in order to get $1. And on the other hand, if you intend to sell $1, you will actually get 7.2808. So in fact, to make it simple, whether you buy or sell a currency, we are always referring to the base currency, always referring to the far left hand side, because buying and the base currency means you are actually selling the quote currency, and selling the base currency also means that you are buying the quote currency. So in short, always refer, when you buy or sell, always refer to the far left hand side, which is the base currency. And this is a typical chart of USD CNH. You can look at it as, there will be price changes each and every day, because the value of currency will change accordingly to the demand and supply dynamics in the market. So for example, if you look at the far right hand side, is that the USD to CNH, the spot price would be 7.2848. So in other words, what it means is that $1, it is actually worth one Chinese yuan of 7.2848. So now you already know how to actually read a currency code. So the next thing is that what does it mean by the value of a currency? Now, of course, the value of currency is actually not measured in absolute terms. The value of currency is always measured in a relative to the currency that it is going to measure against. So to make it simple, is that, for example, in this case, USD against CNH in this picture, you can see when one currency appreciates, it means the other currency is going to weaken. So in this case, for example, on the left hand side, if US dollar is going stronger, it's going to appreciate, it means the Chinese currency is going to depreciate. So when you analyze currency, here are a few words that we will be using interchangeably, which is stronger, strengthening, appreciate. All of them are actually referring to the same situation, whereby you are going to exchange more the other foreign currency, which is your CNH. Similarly, same goes for weaker, weakening, and depreciate. They are also referring to the same situation. Now, similarly, on the flip side of the coin, when one currency depreciates, for example, if US dollar depreciates or when US dollar weakens or weakening, it means the Chinese currency, the Chinese yuan, is stronger, would be appreciated. So later in this topic, I'm going to share with you what are the key fundamentals you need to look at when you do your fundamental analysis for currency trading. So how to value a currency or even read a currency is very important so that you are able to interpret and do your fundamental analysis correctly and make a correct trading position. Now let's take a look at this example. What does it mean by strengthening and weakening of a currency? So for example, this is a US dollar against a CNH chart. So here on the first left hand side is whereby your US dollar appreciates. On the flip side means your CNH depreciates. So in other words, it also means that your $1 you can exchange for more CNH. On the other hand, when you see this chart coming down, it means the US dollar is depreciating, the US dollar is weakening, and your CNH is appreciating. So it also means your $1 can exchange for lesser CNH. So now that you already know how to interpret the chart, whether US dollar appreciates or depreciates, how about a long or short position when you trade FCNH? It's very important. Otherwise, you may make a wrong trading decision. So how do we know we are going to long or even short FCNH? So when you trade your Mini USD slash CNH futures, we have two positions, right? Long and short position. So remember, when you take a long position, it's when you expect your US dollar to be strengthening or when you expect the Chinese currency to weaken. And when you take a short position for FCNH, it means when you expect US dollar to weaken or when you expect the CNH to strengthen. So in short, when you take long or short position, a quick rule of thumb is that you always refer to the first base currency code. Okay, when you long means you expect US dollar to go up. When you short means you expect US dollar to come down. Very simple, right? And let's have a look at the chart here. Similarly, same thing, when you expect US dollar to appreciate or CNH to weaken, you long FCNH. When you expect US dollar to weaken or CNH to strengthen, you actually take a short position in FCNH. So remember this very basic structure, all right? Otherwise, you may take the incorrect position in your FCNH trading. So now that you already know the basics of currency futures, and how does currency futures, this FCNH, different from some other trading instrument? So firstly, we compare to stock. I believe you are very familiar with this already. Different stocks in different industry, they all have different fundamentals to look at. And of course, stock market rely on positive expected future earnings for the price in order to go up. And in stocks, you make money in only one direction only, when the stock price goes up. For index futures, because it is a derivative for indices or even it represents the stock market, also it relies on stock in the index basket. However, the benefits of index futures is that you can trade both up and down direction. How about for commodity futures? Commodity futures, the price movement it depends on the demand and supply of the physical commodity itself. Of course, here you can also trade both up and down directions. And lastly, which is the currency futures. Here we have new futures, which is the FCNH. It's entirely different fundamentals to look at. Later on, we are going to look at it, and you can also, in currency futures, you can also trade both up and down directions. Now, in the next topic, we are going to look at what makes currency futures a good market to trade. And as I've already mentioned, currency futures is very different from other futures product. So let's have a look in this. So of course, the first benefit you can trade with currency futures is on diversification in terms of, when you are able to add currency futures in your portfolio, you are able to reduce your portfolio volatility and risk. Second thing is that in terms of speculation opportunities, you have another extra product for you to trade, especially when the market presents opportunity for you to take advantage on. Thirdly, these currency futures, you can use it for risk management and hedging. And lastly would be all of the benefits of futures trading. As you know, futures trading is different from trading stocks. Here are some of the many benefits. Because of time limitation, I'm going to highlight the first 3 key benefits that makes futures currency, which is the FCNH, unique as compared to other trading products. So the first one, of course, would be on diversification, in terms of how you can use this in terms of reducing your portfolio risk. And of course, the rule of thumb for diversification is that when you are able to add asset that is uncorrelated or negatively correlated to each other. Now, diversification is not about adding more stocks or more trading products to your portfolio. You need to make sure that these assets that you add in your portfolio are uncorrelated or negatively correlated, so that you are able to get the diversification benefits. And let's have a look at a quick simple understanding. How do we actually read on correlation? What do we mean by uncorrelated or negatively correlated? So the first thing is, of course, when we look at correlation, the value is actually there would be maximum is +1, and the negative would be, the lowest point would be the -1. So of course, correlation, the figure can go from along +1 or towards 0 or towards -1. A positive figure, it means closer to 1. It means it has a highly positive correlation. It means, for example, if when we compare to 2 assets, asset A and asset B. Asset A, let's say it's a stock market. If stock market goes down by 10%, your portfolio of stocks would come down by 10%. And if you have no correlation or uncorrelated assets to your product into your portfolio, if stock market, same thing, if it goes down by 10%, your other asset, for example, your asset B that has no correlation with your stocks at all, your asset B is not affected at all. And last scenario, it's when stock comes down by 10%, if you add an asset that has a negative correlation, it means your other asset actually goes up if the stock market comes down. So here we can see there are 2 things that you want to add into your portfolio, is that you want to have an uncorrelated asset as well as a negatively correlated asset, so that you are able to gain a diversification benefit. So let's have a look at that example about how to do a diversified portfolio. So of course, you may have some of you may have already coming from stock background, right? Whereby you may be trading stocks, and 100% of your portfolio actually consists of stocks. If your whole portfolio allocation it's 100% in stocks, and let's say if the general stock market is down by 20%, and theoretically speaking, your net impact for your stock portfolio maybe have a net impact of coming down by 20%. So this is where even though you may have already diversified across within different industry of stocks, you are still affected. How about adding a negative or uncorrelated asset? Let's have a look. Now, whether your portfolio is diversified or not, we can have a look at this table. Of course, this table is actually a study or an information that is conducted in the United States market, because I am able to get the figure for Malaysian market. So this table states the correlation of currency and with other assets, and the correlation of comparing with other assets as well. So if you are investing in assets that perform similarly, especially if a downward moving markets, then your answer is that you are not having a diversification. On the opposite side, if you're investing in an asset that demonstrates little to no correlation, if the market comes down, one way or another, it may help you enhance diversification by reduce your portfolio volatility. Now let's have a closer look into how currency actually helps you in terms of diversifying your portfolio. So here I am going to highlight two things. It might look small, but don't worry, I have already highlighted out these two red square, and I've already put it out in text format. So here you can see that, at least in the United States context, is that currency, we can see it has a negative relationship with in general commodities. Currency is also negatively correlated towards stock market. So one simple thing, implication that we can see here is that when you add currency asset into your portfolio, you are able to actually achieve quite a good diversification benefit. Let's have a look at compare with a diversification portfolio. Let's say if you were to put currency into your portfolio. So of course, this is just only an example. So just now we have 100% allocation in terms of stocks only. So here we diversify your portfolio into different other assets, which is your commodities as well as currency. You have 20% allocation in terms of your commodities and currency. So same scenario, if your stock market is actually down by 20%. So based on the figure just now, the correlation figure just now, is that, when stock market comes down, which means your currency would actually move in opposite direction, right? So if we are going to look at the whole portfolio, at least if your other assets are down, at least some or few of your assets is actually having a gain. So the net impact of your portfolio here is actually, let's say 15% compared to 100% of allocation towards stocks. Okay, so here we can see that, your simulated portfolio is that, when you add currency, or in short, low correlation or uncorrelated, negatively correlated assets, you can actually reduce your portfolio volatility and risk. Now, of course, the second benefit for currency trading, your currency futures trading, is that you are able to have speculative opportunities. Of course, this is quite self-explanatory for you. And when you have additional product, whenever you are able to see bullish or bearish opportunity, especially in currency futures market, you are able to take both sides of the direction. You can long if you're bullish, you can short if you are bearish about the US dollar movement. So it actually, you are able to enhance your portfolio return. Now, the second benefit in terms of speculation opportunities here is that a lot of traders, sooner or later, you are going to progress to be a better, more advanced trader, right? So along the journey, when you are developing to become a more advanced trader, you will be looking at more fundamentals instead of just looking at local fundamentals. You will be looking at global fundamentals. You will be looking at fundamentals across asset classes. So this is where you are able to gauge the intermarket relationships between asset classes and make an overall better investment decisions. And the third benefit of currency futures trading is in fact on risk management and hedging. So of course, even as retail traders, you are able to do risk management and hedging using this FCNH as well. So let's have a look how you can do that. So of course, when we mentioned about hedging is that we can actually hedge against weakening US dollar. So let's say when US dollar comes down, it means that your ringgit would be stronger, right? So later on, I'm going to give you a quick case study on how to actually do hedging even as a retail trader. So this FCNH, this new currency futures product, you can use it as an alternative hedging instrument as a proxy hedge to hedge against a weaker US dollar. Why? Because currently we don't have US dollar towards ringgit futures product for you to hedge, right? But you can actually take advantage of this FCNH to help you hedge against your US dollar portfolio. Let's have a look into this. So how you can actually hedge against a weaker US dollar is that, so here, since you have your FCNH, right? So it means it is US dollar against CNH. And similarly, for us is that we have US dollar against Ringgit Malaysia. So if you have investment in terms of US dollar, what we are afraid is that we do like US dollar to strengthen because your US dollar portfolio is, when you convert back, you're able to exchange for more ringgit. However, the challenge here is that what happens if your US dollar portfolio is coming down? Yes, your ringgit is strengthening. However, your US dollar is actually, you will be converting back less ringgit. So in other words, is that when US dollar comes down, is something that we do not want. So in a weaker US dollar environment, it also means it's you will be getting lesser ringgit. So which is why you can take advantage of this FCNH as an alternative hedging instrument. In other words, we can use it as a proxy hedge to substitute for us in order to hedge against a weakening US dollar against ringgit. Why is it a proxy hedge? Let's have a look how you are able to actually do that. Because the Chinese currency, the CNH and Malaysia ringgit, both of them are actually, they have high positive correlation. Let's have a look in the next few chart. So this diagram is of course a 10-year chart comparison. We are going to look at the relationship between CNH and CNY. So the blue line represents CNH and the purple line represents Ringgit Malaysia. So of course here we are going to look at this table here is that, you know, over the long run for the past 10 years, the relationship between the correlation between Chinese yuan and Malaysia ringgit, it is considered quite closer to 1. It is above 0.8. So Malaysia ringgit and CNH, they are highly correlated. So which is why FCNH can be considered as quite a good proxy futures instrument for you to hedge against a weaker ringgit. And of course, if we are looking at, you know, a near term, right, especially this near 12 months, both CNH and Malaysia ringgit, they have a very high correlation. We can even have a closer look at the recent 1-year chart. Is that you can see both CNH and Ringgit Malaysia, the line, both purple and blue line, both of them are quite moving quite in tandem together. So which is why FCNH can serve as quite a good hedging instrument, as a proxy hedge for you to hedge against weak US dollar. So of course, the last benefit, needless to say, is that all of the benefits of futures trading compared to trading the stock market, because futures trading, in fact, you have transparent pricing, you are able to have a natural leverage, because when you trade futures, this leverage, you don't have to pay interest at all, because this is actually a very, it is created as an interest-free, natural leverage instrument. And most importantly, futures trading is a highly regulated environment for you to do your futures trading. And lastly, of course, fundamental analysis for FCNH. I'm not going into technical analysis because I believe a majority of you are quite proficient in technical analysis. However, technical analysis, how you identify the trend, support and resistance, how you look at price patterns, basically similar approach, or even same process for analyzing currency futures. However, what makes FCNH futures product different from other products is that the fundamental factors that influence currency price movement is different from the fundamental factors that affects FKLI or FCPO, for example. So here I'm going to highlight some of the few key fundamental factors that influence currency movement. Now, of course, back to this diagram, when we analyze or looking at the fundamentals of a currency, we are actually monitoring the economic activity between two countries. So it's unlike trading FCPO or even FKLI index futures. You can actually look at individual standalone thing. But when it comes to trading currency futures, we are actually comparing between two things. Remember, because just now I've already shared with you, currency value is actually relatively from one country with another. So it is very important for you to be able to analyze when it comes to the fundamental factors for both countries. So what are the factors that we need to analyze when it comes to looking at currency, which is the exchange rates? So there are a few key fundamentals that we need to look at. Later on, we are going to go a little bit in detail one by one. So firstly would be your interest rate. Inflation rate and interest rate both are actually quite closely together. International trade, economic performance, your political and economic stability, and lastly your public debt, which is your government debt level. So let's have a look into each and every one of them, so that you know what are the things that you need to look and analyze, what are the news that you need to pay attention on when it comes to analyzing FCNH. So the firstly, of course, would be the interest rate as well as inflation rate. So if there is any uncertainty in in the market in terms of interest rate, then any developments regarding the interest rate can have the direct effect on the currency market. So generally speaking is that when a country raises interest rate, so it means it is very attractive for investors to put money in that particular currency. So the country's currency would strengthen in relation with other currency or other assets. So for example, if United States is going to hike their interest rate, so it means at least in the short term, it would be very attractive for investors to park their money in terms of US dollar rather than some other currency, for example CNH. So it's very important here in terms of interest rate is that changes in interest rate, usually it is generally it is affected by inflation rate and even economic growth, because when there is inflation rate increasing, then interest rate would increase as well. So which is why inflation rate and interest rate, both of them are very closely related. So when you analyze or even read news about that is related to US dollar or CNH, it is important for you to take note on this. So when you trade FCNH, it's important for you to monitor the interest rate and inflation rate announcement for both US and China. The next factor would be on international trade. This is something very important as well, because the value of currency, it's about the dynamics between two countries. So the international trade between two countries are important. And in this case, it would be the international trade between the United States and China. So of course, the first thing that we would be looking at would be the trade balance, which is the import and export figure. So the United States is generally a net importer, while China is a net exporter. So you want to look at the changes in import and export figures in these two countries. Whether does this figure help the currency to strengthen or weaken? And the next thing would be on the terms of trade and trade policy. And of course, recently, it's in the past, I think 5 years back, it has been a very, very important thing. Ever since Donald Trump administration as the United States of president, is that the trade war between US and China since January 2018. So this has a lot of changes in terms of the terms of trade and trade policy between these two countries. So the terms of trade actually refers to the ratio of a country, how it exchanges its exports for imports. And the trade policy, for example, like the rules and regulations that the government adopt to manage the interests, the international trade, whether they want to increase their import and export tax by their tariff, whether they are going to impose quota about how much they would allow import or export of particular products. So there are a lot of factors to look at in terms of international trade. All right. So to simply speaking, is that international trade, besides interest rate, international trade does affect a lot between the currency movement between USD as well as CNH. Third factor, of course, would be the economic performance. When we look at economic performance, there are a lot of economic indicators like the GDP, employment data, retail sales, manufacturing, PMI. All of this is that we want to look at whether there would be what are the changes in terms of these economic indicators towards the economic growth of a particular country. So since you are trading currency futures, right, between two countries, we want to actually look at what is the economic growth between these two countries. So in other words, you will be looking at the global economic conditions as well. And this is important because you can evaluate the strength of a country's currency. So I give you a quick rule of thumb, okay? It's actually a very quick trick in terms of how to analyze a currency. So as a general rule, whether a news is improving or positive or negative towards the particular currency, you can think yourself as an investor. As a general rule, if the investors want to hold a currency whereby the country is perceived to be safe or has potential growth in the economic activity, then that particular currency would be strengthening. And if as an investor, you do not want to hold that country's currency, or if you perceive it as less safe or have lesser growth, then that currency would actually depreciate in the future. Another factor would be political and economic activity. There are lots of things that is happening between the politics between the two countries, because these two factors are critical for currency's strength. Political uncertainty can lead to market volatility, and evaluating the political stability of a country involves considering a lot of combinations of of these factors, including who is the leader, how is the leader manage the country. A lot of factors on that. So, which is why political stability can significantly, in fact, impact a country's economic activity, the economic prospect in the future, and consequently, the policy that is implemented by government would also consequently impact its attractiveness to foreign investors. So traders, investors, and businesses often assess these factors when making decisions about whether they are going to allocate resources into entering that particular country or not. And therefore, these will affect the currency movement. So again, how to evaluate this is that going back to the general rule is that if an investor want to hold a currency whereby the countries is perceived to be safe or has potential growth in that economic activity, then that currency would be has potential to be strengthening. And the last factor, of course, would be the public debt. In other words, would be the government debt. Now, analyzing government debt is a complex thing for you to do because it involves considering various factors to understand the financial health and the sustainability of the government's fiscal position. How is the government is going to manage and even administer the country? And understanding these factors in combination, it actually able to provide you a much more comprehensive view about the government's debt situation. So it's important for you to take note on in this context is that the interpretation of these indicators should take also into consideration about the specific economic and political condition of a country into your analysis as well. All right, because analyzing currency, the value of a currency is it should be dynamic, and these are the things factors that will be evolving over time. So here are the general few key important factors that may fall into either of these 6 categories for you to actually to evaluate the value of a currency. All of them are interrelated, so which is why trading currency futures is fun, because you will be advancing yourself as a trader and investor to look at the intermarket relationship between asset classes, countries, and also gain macro perspectives about the dynamics of the global market economic activities. And one last thing before we end is that how do you get the fundamental information? Of course, the first thing you can look at is definitely from news. The second approach you can actually get this fundamental information is that you can Google search the key term in terms of economic calendar. So when you click on Google search economic calendar, I believe there are a whole list of websites that shows economic calendar. So there are tons of free economic calendar resources you can use to get all of these fundamental information. So this is a typical economic calendar. How is it going to look like? So we are going to have a look at how you can read this kind of economic calendar. So generally speaking, economic calendar, they will show it in terms of what is whether there is an announcement today or this week or the upcoming few weeks. So here you can put a filter since you are looking at trading FCNH, right? So you will be looking at the United States US dollar and the Chinese yuan. So you can filter out to look at only these 2 countries, USD and CNY. So when you filter it out, you are able to look at all of the list of announcement that is going to publish economic indicator or economic data that is going to publish for that particular country, what time they are going to publish, and as well as what are their importance. Is it having a high priority, medium priority, or low priority? So generally speaking, as a currency futures trader, you want to filter out news that has medium to high priority. So you can get 2 stars or 3 stars, medium to high priority. So here are the list of things that is going to come up. So, and there will be 3 figures that you can look at. So here you can see there is actual figure, that is the actual real data. There is a forecast figure. It can be by, a forecast by economists or a consensus forecast, and the previous figure that will be published here. So here you can see on the top part here is that you can see all of these three figures is it's already up there. So which means the news has already been published. Whereas you can see at the bottom here, the actual figure is not published yet. So as a general rule of thumb, if the news has not been published or the data is not published yet, here would be empty. And what you can do is comparing forecasts as well as previous. And if you are bullish in a particular currency, for example, if you are bullish in US dollar, so it means your FCNH is going to go up. You can actually take a long position to take advantage on it. And if the news that you perceive as bearish, you can take a short position in FCNH. Now, how do we know whether it is bullish or bearish, whether the news is good or bad for you? A quick thing for you to look at is you can look at the actual figure that is actually coming out. So here now these days websites web developers has make our life a bit more easily, right? So you can see when some of the figures you're not quite sure when the forecast, the actual comparing to the previous figure is good or bad, is that just look at the number, the color that is coming out. If it is red color, it would be considered here, for example, it would be bearish for US dollar. If it is black in color, it means it is very neutral. And if it is green color, generally speaking, it would be bullish for, let's say this green color is actually bullish for Chinese yuan. And this red color is bearish for US dollar. So do take some time for you to read and how to interpret currency futures accurately. So you can play around and Google search economic calendar. Any provider is fine. So you can see trading currency futures is actually very fun and exciting because you are going to learn a lot of things, especially looking your investment and trading at a much more global perspective. All right. So before I end this session, there are 4 key takeaways here. Is that number one, very important, currency futures. It is not looking at one country only. You are comparing both countries. And I have already shared with you how to interpret currency quote. Very simple. Always refer to the quote that is in front, which means the far left hand side, US dollar / CNH, right? So always refer to the first one, US dollar, whether US dollar is strengthening or weakening. So if one currency is strengthening, it means the other currency would be weakening. And I have also shared with you what are the benefits of trading currency futures. Here are the 3 key benefits that makes currency futures unique compared to any other trading instruments. And here are the 6 key fundamental factors that you need to look at when you analyze currency movements. So that's it for today's sharing. Hopefully you have a better understanding and how does currency market actually works, because there are many benefits that you can do when it comes to currency futures trading.
For CY, for his very informative presentation. I believe by now you understand better about this currency futures. Am I correct? Because I believe before the start, many of you say that you do not understand what is currency futures. So by now you should have some basic understanding about these currency futures. Now we're going to start with the Q&A session. So if you have any question, you can start to click on this Q&A box and send your question and send it to all co-hosts. Now, while waiting for your question, as I mentioned to you for this particular session, Bursa Malaysia Derivatives is very kind. They're giving away some lucky draw. So in total, we have 10 prizes. So the total of this particular lucky draw is worth 300 ringgit. So if you are going to stand a chance to win this lucky draw, how can you become a winner? Now, there are two things that you need to do. The first thing, you need to answer 3 quiz questions. Don't rush to go and do it because we will give you sufficient time for you to finish. There's no such thing as first come, first serve. So don't rush to do it because everyone is rushing. You cannot access as well. So later, you can take your own sweet time to finish it. Just focus for today's session. Now, second part, not only you need to answer the 3 quiz questions, you also need to complete the survey form. So 2 things, I repeat, you must do. One is to answer all the 3 quiz questions, followed by you need to complete the survey form as well. Now, the cutoff time is 10:30. So after today's session, you still have 30 minutes to give it a thought and slowly finish the 3 quiz questions and also to complete the survey form. Now, result will be announced within 1 week from today itself. How can you access to both the quiz and survey form? There are 2 methods. First, you can scan this QR code, or else in the chat box, I believe our admin already put in the link. You can click on the link to access to both quiz and survey form. So I repeat, you must complete both to entitle to become one of the lucky draw winner. Now, while you are doing this, I repeat, you no need to rush to go and do it. You can wait until the end of the session. That only you start to do. We are going to cut off at 10:30 p.m. So you still have plenty of time to finish it. So coming back to our Q&A session, we have many questions for this particular session. I'm very surprised this evening. Really, you can see the whole Q&A box is full of questions. So because of time limitation, we are going to pick up 2 to 3 questions that's the most relevant for today's session. So I'm going to compile because many of the questions are quite similar. Now, first question, let me help Ryan to answer because this question is more related to the first topic, but subsequently after 9 p.m. I still saw many of you asking the similar question. What is the margin for this currency futures contract? Now, based on what Ryan has already covered just now, he's expecting about 400 to 600 USD per contract, the initial margin. So drawing closer, they are going to announce the final initial margin. So you can stay tuned to it, but at this moment, they are expecting around 400 to 600 USD per contract. So for those who are trading foreign futures, you can do a comparison to give it a thought whether is it better for you to trade this currency futures or not. Now, second question is for CY. Can you brief us the benefit of trading currency futures compared to commodity or even index futures?
Okay, for as I have already shared earlier, is that currency futures are different from index futures and commodity futures. Is that index futures, it is very closely related to the stock market. So stock market goes up, index futures will have to follow the stock market because both of them has a strong relationship. So the good thing about index futures is that you can take a short position in index futures when the stock market comes down. However, when it comes to currency futures, as I have already presented earlier, currency futures, it has a different correlation compared to index futures and commodity futures. So based on the correlation table that I have shared with you earlier, is that you can see whatever stock market does, it does not affect futures. Whatever the stock market does, it has no relationship to the commodity futures or even the currency futures. So which means you can see commodity and currency futures, they are like stand alone by itself. So which means even when stock market goes up or goes down, currency futures or even commodity futures, they are actually stand alone by themselves. They have almost little to no impact over the long run.
Okay, now the next question is related to the economic calendars that just now you presented. Maybe can you please show them exactly how to access to it? While you are preparing, let me finish or wrap up this session. Then later we will let CY to show you how to access to this all economic calendar. Now let me do a very quick wrap up. Beside today's session, we still have another session next Thursday as well from 8:30 until 10 p.m. We are going to have application base for this particular currency futures contract. So this particular session, the topic will be multi-style CNH trading from entry strategies to expert managed exits. So for those who are interested, what you can do is you can scan this QR code to register, or else in the chat box, our admin already provided the link. You can click on the link to access to this particular registration page. So once you click on the link, it will be our events calendar. What you need to do is you search on Thursday itself. Then you select the 30th of November, you click on it, you can register accordingly. At least you can lock in your calendar, then you will be reminded as well for the session. Now, for those who do not have any basic in futures, because before you need to understand what is currency futures, the first thing that you need to know is you must understand what is futures. Some of you, the way you ask your question, right, we notice that you do not have background in futures trading. If you totally do not have background in futures trading, you are welcome to attend this online workshop. This workshop is also provided by Bursa Malaysia to understand or kickstart your futures trading. So this particular online workshop, we are going to cover from A until Z for you to start yourself in futures trading. Then once you understand what is futures trading, subsequently for you to understand what is currency futures trading, it will be easier. So again, you need to scan this QR code and you register accordingly. This will be the last session for this year. So please grab your seat as soon as possible, because once the registration is full, we're going to close the session. So once you access to the calendar, please select the Saturday, 2nd of December, and click and register accordingly. Now, the last part, just a gentle reminder, once our session ends later at 10 p.m., you can start to finish these two parts. So the first one, please finish the 3 quiz question, followed by complete the survey form. Only if you finish these two, then only you are qualified to become one of the lucky draw winners for this evening webinar session. So 10 prizes will be given out for Touch and Go e-wallet reload pin. So very nice, right? So these prizes are being sponsored by Bursa Malaysia Derivatives, and the cutoff time will be 10:30 p.m. and the results will be announced within 1 week. Now, Siwa, are you ready with the economic calendars? So let us wrap it up with the economic calendars.
Okay, sure. Let me share my screen here. Okay, here you can see that, when you type in the keyword economic calendar, there will be tons of resources that you can actually look at. So most of the time I will look at the top 3 or the top 4. So for example, here we are going to look at investing.com, the economic calendar. So once you enter here, it will bring you to this particular page. And there are several things that you need to do so that you are able to access the information properly. Now, here you can see that the economic calendar can be sorted by today, tomorrow, next week, or even next week. So the first step that I will strongly encourage you to do is that number 1 is always change your time setting here, because I think by default, if you do not do any settings, the time here would be using the time from United States or New York time. So it's very important for you to change to Malaysia time zone, so that when the news published that is coming up is actually following Malaysia time zone here. Alright, so let it load for a little moment. The time here is actually based on Malaysia time zone. So if you do not change the time setting, right, if this is actually New York time zone, the time here is actually all based on New York time. So it's actually very dangerous if you don't do this first step correctly, right? So the first step, always change your time zone first. Second step is since you are trading FCNH, the information that we are interested in is actually United States as well as China only. So how you can do that is that you can go to the right hand side corner here, filters, and there will be a list of countries that will be for you to select. So of course, for FCNH, what we want to do is actually search for China, Malaysia, if you are interested to look at if there is any Malaysia activity happening or not, and United States. So you select 2 or 3 countries, and all of the economic activity here you can search based on whichever activity that you want. So you can actually select all or just select only the few key ones. Generally speaking, economic activity, central banks, inflation rate, trade balance, employment, these are the few important things. And of course, on the importance, we want to look at least moderate to high importance. So I just take these 2. The low importance, which means it does not impact the currency movement that much, so I unselect this. So once you have select the country that you want and the item that you want and the importance, you can just apply it, and you can see the, let it load first. So you can see all of the things will be filtered based on your criteria that you want to look at. And of course, whatever things that is going to happen today, we are not quite interested, right? Unless what we are interested with as a trader is that we want to look at what is going to happen this coming week or next week. So since today is already Thursday and you are able to see Monday, Tuesday, Wednesday, data has already published. You can see one of the important thing is actually FOMC meeting minutes, which is the US central bank important thing for you to look at. So data that has already been published, you can see the actual figure, it's already there. How to know whether it is a good figure or a negative figure is that black color means it's a neutral figure, and red color, it is actually a more tend towards bearish figure. All right, so it's relatively easier for you to analyze. Green color would be actually a positive thing. And what is not published yet is actually, let's say tomorrow, Friday. So it will be remain as empty here. So since it's Friday, already today is Thursday, so Friday it's only, there are a few things which I see this not so much important. So we can move around, click on next week and see what are the news that is important that you need to look at here. All right, so that's it, how you can access to economic calendars. Different website, of course, different platform, their economic calendar interface might look different. However, the structure or the mechanism, how you do your news filtering, and most importantly, you need to adjust the time according to Malaysia time, so that the time here is actually based on the time, our Malaysia time zone, what time the news is going to come out.
Okay, thanks CY for your further elaboration. So this comes to the end of session for this evening, slightly late, but at least we covered whatever is required for your side. So we are going to end our session. We are going to see you on next Thursday. Thanks to Ryan and thanks to CY. Have a nice night. Good night. Bye-bye.
Bye-bye.